All right, this is problem 1024 for an example problem. So, the following transactions pertain to year 1, the first year operations of Bailey Company. All inventory was started and completed during year 1. Assume that all transactions are cash transactions. This will be a lot like your homework problem. You don't have the horizontal statements model for the homework problem, but we're going to work through that so that way we know where everything's coming from. So, event number 1, we acquire $7,000 cash by issuing common stock. So, we get our $7,000 cash, common stock goes up, and then our cash flow goes up by $7,000 for our financing activity. For number 2, we pay $2,800 for materials used to produce inventory. So now you have to think, is this a product cost or a period cost? Is this directly related to our products? Well, since we're producing the inventory, this is a period or a product cost. So that means it's going to be one of those asset exchange transactions. So we're going to pay the $2,800, but it's going to go into our inventory amount. And it comes out of cash flow as an operating activity. The next one, again, we are looking at our $1,900 to production workers. Well, production workers mean they're working on the product line. So these are direct labor and our product costs. So we again have that asset exchange. But our cash flow goes down from operating activities. Number 4, we pay a rental fee for production equipment. All right, so this is equipment directly related to producing the product. So this is going to be an overhead cost, which is then a product cost. So again, same thing, that asset exchange down here. $1,300 out of cash flow. All right. We pay $350 to administrative employees. Do our administrative employees have any direct tie to the production of our products? Hope you said no. So these are period costs, which means that we are going to take care of that right here. So it's an expense that we're taking care of. Rental fee for administrative office equipment, that's again another period cost. And I don't have enough lines here, so I'll have to make sure you guys get that. Again, that's an administrative expense. All right, so now number 7. We produce 500 units of inventory and we sell 450 units of them for $1,750 each. So to find out our revenue, we need to take that 450 times $17.50. When you do that, I believe you should get 78.25. Just double check that. Yep. Oh, 78.75. That's why I need to check it. All right, so this will be our cash revenue. So we are bringing in 78.75. Again, that's an operating activity. But then we've also got to now recognize our cost of goods sold. So that's $450, but we got to figure out, okay, what did it cost to produce these? Well, let's go back and find our product costs. So we've got the $2,800 for raw materials, the $1,900 for production, and the overhead costs. So when we add those together, so we take our 28 plus 19 plus 13, you should get 6,000. So we had $6,000 worth of expenses to produce 500 units. So to find out our per unit cost, we take 6,000 divided by 500. We should get $12 per unit. So our cost of goods sold is $12 per unit. So that means we then take 450 times 12 to get 5,400, which is my cost of goods sold. So that's going to be 5,400 out of our inventory, 5,400 out of our retained earnings. We now have an expense of 5,400, but we've already taken that out of cash, so nothing goes there, and now we need our totals. So when you add 7,000 and subtract the 2,800 minus the 1,900 minus 1,300 minus 350 minus 400, and then add the 78.75, I get cash of 81.25. My total inventory then we come up with 2,800 plus 1,900, 1,300 minus 5,400, should get 600 in inventory. So that means that we've got $600 worth of product left. If we looked at it, does that make sense? Well, we produced 500, we sold 450, so that means we have 50 left. So 50 times 12 should give me 600. So that's correct. Common stock, 7,000. Retained earnings, come up with about 1,725. Revenue, 78.75. Expenses, 61.50. When we do the subtraction there, end up with 1,725. And then our cash flows started out with 7,000. Subtract the 2,800 minus the 1,900 minus the 1,300 minus the 350 minus the 400, and then add in our revenue of 78.75, and we should get 81.25 again, just like we did for cash because we did all cash sales. All right, so now we have to actually fill out and prepare the income statement and balance sheet in accordance with GAAP. So I'll have some in here for you. Our income statement, sales revenue, right there. We just look right up here. So we get 78.75. Cost of goods sold. Well, we figured that out up here. That's 5,400. Which is then going to give me a gross margin when we do the subtraction. of $24.75. And then we've got our administrative expense. So now we've got to go back up and look, what were our administrative expenses? Well, we had our administrative employees and the office equipment. So we have to add those two together. So this would be $350 plus $400. That should be $750. And when you take $24.75 minus $750, you get that $17.25. My assets, you're just taking them straight from the balance sheet right up here. So total assets for cash, we get $81.25. Inventory, we get $600. Gives me that total of $87.25. Common stock, we get $7,000. And our retained earnings are $17.25. Again, we get $87.25. Remember, that's all coming from where that blue circle is. And our assets equal our total equity. We don't have any liabilities in this example, so that makes it all good. So it's all good because they equal out, and we got to make sure our balance sheet is equal. All right, so our statement of cash flow now. So operating activities, we had all of these for operating activities. So when we add all those up, so inflow would actually just be that $78.75. And the outflow then for inventory is that $6,000. So that's just these first three expenses, because these were all related to our inventory. And then for administration, administrative expenses, that's that $750 again. For net outflow of $78.75 minus the $6,000 minus the $750 of $11.25. We didn't have any investing activities. For financing activities, we had that initial $7,000 cash from common stock. So our net change, add these three together, we get $81.25. We started this year, or the company formed this year, so we didn't have any beginning cash balance, so we get $81.25. And that is example 10 or problem 1024B.